Trade Genius.
What's up, guys? Philip at Trade Genius. We're just going to jump right into the charts in this video. Big thing I wanted to note here, we're going to take a look at the US markets real quick, and we're going to look at Bitcoin because this is a game changer. What happened yesterday and today? I mean, you basically just had a pretty quick crash in terms of price. Whenever you're dealing with like a 7% plus pullback from the top, in this short amount of time, that's a crash. Not a huge crash, but a crash. And when you break below the 20 or the 200-day moving average, you really need to start taking notice, especially in the fashion that this did, where it didn't really pause there. A lot of times you'll see a pause or it'll stop there. I mean, it basically just went right through it. So what I wanted to point out was, Monday's video, we kind of said, hey, heads up, things are looking a little shaky. And sure enough, things have rolled over pretty hard. When it comes to the 200-day moving average, and this works with cryptos too, it's a major moving average that people look at. And basically, the old adage is no good things happen under the 200-day moving average. So that's this red line that we have on the chart here. And so basically, there's like three things that happens in the US markets. Specifically, we're talking about the S&P 500. That's the big index for the US markets. You're either going to slice through it and make a quick V recovery, and you see that over here back in October of 2014. Also, October is generally a month where when these events happen, it's in October. But you'll either have a quick dip like this. So this is October. This is the 2014 chart. And it's a fairly quick recovery. Maybe one more day, you get a nice hammer and then come out of that. Or you lose it, you lose the 200-day, you get a really sharp move down off of it, and then you spend a couple months, actually in this area here, 2015, end of 2015, you basically saw, you didn't really get back above the 200-day until March of 2016. So extended period down of consolidation and correcting. The other more scary alternative is what happened back in the 07 top. You lost the 200-day, rolled over hard, came back up to it, and then failed that. And that failure usually is where if you don't recover there and you make new lows off of that, coming under the 200-day moving average, that's usually really bearish. And in that situation, we had a bear market for basically we started on that end of 07 and then really rolled over end of middle of 08 and really went down in earnest into early 09. So well over a year of bearishness. So basically, guys, it's basically when we have something like this and a move that had this kind of veracity to it, you really want to pay attention, especially if you've got if you're worried about you got asset classes that would be affected with the stock market indices taking a hit. So when we look at Bitcoin, a lot of people are like, well, does this affect Bitcoin? Well, if we look at Bitcoin, basically what we see is just more of the same as far as this consolidation pattern. So we had a drop down. Bitcoin was really holding its own as far as not really being affected by the market turmoil. Today we had what we call the BART move, right? Because it looks like BART heads, you're going to move down and then move up. Nothing really changes on this move down. Basically, you just the play here, as with most consolidating patterns, is you buy the bottom of the consolidated range and you sell the top. And so buyers came in here on this spike low earlier in the day, and we got down to 60.30. So not surprising that we've made a move up off of that, and I would expect that we could kind of chop in this area. But keep in mind, on Wednesday the CBOE futures contract for this month expires, and typically we get a rise off of that, and then we could see a move back up into the 64 to 6,500 area that would get us back to this trend line. So I think that would be how the week plays out. But again, as far as this move down, it could have been a couple of factors. It could have been, sometimes market volatility will spill over if people have positions they need to liquidate to cover margin calls. You certainly could have that scenario where that spilled over into the Bitcoin price. People had to dump Bitcoin to cover margin calls. One possible scenario. The other scenario was there's a lot of rumors going around about Bitfinex and their relationship with their banking relationship with, I believe, HSBC, and they suspended fiat deposits. Supposedly that's a temporary thing, but I think there might have been some jitterbugs about that too. So that could have been another thing that was affecting the dump in price. Sometimes the whales will take advantage of these negative news things and see if they can push price down, but there was a lot of liquidity in this move down, and I think that this is just going to play out where we play in this range of these red lines, this pattern within a pattern of this larger descending wedge that we kind of have going on here. So that's pretty much it there. I don't think things fundamentally change with the Bitcoin price action, still within the consolidating range that we've seen, unlike the stock markets, which have just really shaved off almost about 8% move here down, guys. So I think there's probably more downside ahead for the markets, even if there is a V recovery. But really now what's going to happen is to see how many down days we get here and how it reacts to the 200-day moving average going back up. So that's the thing with the equity markets, the cash markets for the U.S. stock markets. But as far as it correlating over to Bitcoin, haven't seen it where it's going to do anything to break that current pattern that we're in. So anyway, just thought I would let you guys know. A lot of people were wondering about the correlations and things like that, but pattern-wise, vastly different on the S&P 500 and the other stock indices versus Bitcoin. Guys, again, if you guys want to get into the room with us, and we're in there every day, signals every day, binaries, cryptos, and ETF stocks. So we have our specials running. Feel free to jump in on those. TradeLikeAGenius.com. We'd love to see you in the room. And again, if you guys are looking for training packages or want to see what our training packages are like, you can always get this free lesson on TradeLikeAGenius.com. All right, guys, that's it for this video. Thanks for watching. Please hit like and subscribe, and I will see you on the next video. Take care. Bye.
Trade Genius.